As many of you will know, I'm a big advocate of Proterra, the up-and-coming EV bus company based in California. I've done previous analysis on both the company's business and the stock valuation and came to the conclusion that the stock offered significant upside potential given that it can execute on its business plan and growth strategy. Bear in mind, this was back around $17 per share, and the stock right now is trading at below $12, meaning it's even cheaper than when I first opened a position and when I was adding to it a couple of months back. So does this mean that Proterra is currently a steal? Well, I'm going to attempt to answer that in this video, first of all by breaking down why we think the stock has taken a drastic fall and see if there is any fundamental concern. Then maybe reminding ourselves what the likely destination is for Proterra and why we invested in the first place. I think it's always important to do that when a drop like this happens. And then we're going to link that with tracking the progress of the business from what's in the public eye and what we can see. Is it executing on its business plan or strategy? And then lastly, we'll revisit the valuations and analysis I did previously, just recap on that and double check our estimates to see if we think, or at least in my opinion, Proterra is a good buy right now. So first of all, why has the stock been falling? Well, it's a bit of a $1,000,000 question, and I will admit there's no concrete answer yet. However, back on Tuesday and Wednesday last week, the trading volume got as high as around 14 million or 20 million on a daily basis. For the stock of this size, that's huge. And from the direction of the stock, we know the majority of the volume was driven by sell orders. So who could have owned this much of Proterra stock and now be selling it? Well, although it's not known for sure, one rumor at least is that it's most likely to be the PIPE investors. And PIPE stands for Private Investment in Public Equity. And these are investors usually in a SPAC deal. They're a hedge fund usually who form part of the initial deal to go public. And in the case of Proterra, the PIPE investors were given 40 million shares total. And although we don't know exactly who are in the PIPE, because it's a mix of hedge funds, we do know that Chamath Palihapitiya's social capital were very much involved. This was confirmed by him on Twitter when the merger was announced. He was a big advocate of Proterra. So could it be now that Chamath and Social Capital are dumping their shares in Proterra post-merger, giving them a nice 70% return in just 6 months? And for context, really this isn't abnormal that fast money hedge funds would move out or lock in gains on an investment like this. One that comes with some uncertainty and its rewards exist in the future, not today. For example, this was trading at $17 per share when the drop started, so most PIPE investors who were involved in the initial transaction would have made a 60 to 70% return in just 6 months, which is close to 120% annualized IRR. If your job is to just make a hurdle rate of say 10% and everything above that, you get a percentage of the profit or percentage for doing even more than 10%, you're going to lock in that return and take your profits. That's just the business that they are in. But not us, or at least not me. You see, I'm not too worried about the recent sell-off. Granted, it could be something different to what I've just explained. But in all honesty, if it was something fundamental to the business, usually something surfaces which explains the issue, but here we've had nothing. So just to come away from the noise for a moment, a 30% drop, it can be daunting. And I know it's been daunting for a lot of people, but it's important to remember why you invested in the business if this happens and if the drop has fundamentally changed that reasoning. But to answer this, firstly, let me clarify what I think a reasonable destination is for Proterra if you haven't seen any of my videos previously. And if you get familiar with the business, and I urge you to do so before making any judgment, you'll know it's split into 3 segments. You have transit, powered, and energy. And for the transit portion, in which they are an OEM, it's reasonable to assume that the EV bus market for OEMs could reach around $3 billion in revenue by 2025. That's based off of research by P&S, which I'll leave in the description, and they estimate the market will grow at a 50% rate for the next 5 years due to rapidly increasing demands for bus fleets to be electrified. Proterra come up with similar numbers in their research as well. They also think it will grow at a 50% clip for the next 5 to 10 years. And with Proterra's current market share of 50%, this makes it a $1.5 billion revenue portion of the business, the transit portion. And even if they lose some market share, this still makes it over $1 billion business in 2025 based off of these assumptions. And the attractive thing here for investors is that they see this being one of the smaller portions of the business. The plan is this will only make up around 30% of total revenues, the transit business will. The majority of revenues for Proterra will come under their powered and energy businesses, which carry a much bigger TAM opportunity and better long-term economics, if we're being honest. So powered is serving the commercial vehicles market by providing manufacturers of commercial vehicles with leading electric powertrains, and then energy is also serving the commercial vehicle market, but with integrated fleet charging solutions, both hardware and software, that enable the electrification and management of commercial vehicles. So this market, according to Proterra, has the potential to reach 225 billion by 2030, which, although is probably too large for us to make any assumptions off at this point, because that's a massive TAM relative to how big the business is, it does show us how big the potential is for this portion of the business if all the cards fall in the right place. So Proterra assume that around 60 to 70% of their 2025 expected revenue will come from this segment, which equates to roughly 1.7 billion or 2 billion in revenue in 2025. That means it's less than a total 1% penetration of their TAM. So with all that in mind, let's say their likely destination in around 5 to 10 years is being one of, if not the leading electrical bus manufacturers in the US, with close to half of the market, but they're also one of the leading US electrification and energy solution providers for the commercial vehicle industry. Not necessarily one of the global players, but at least one of the leading US players. And you just have to look at their partnerships with the likes of Daimler, plus Daimler's investment into the company, to know that they're going to play a big part in the electrification of commercial vehicles over the coming years. Daimler really have bet big on this company, and I think that's a very good sign of what they may do in the commercial vehicle space. And we could argue over the numbers and pinpoint size of markets, etc., but it would be a waste of time in my opinion. The bottom line is that if Proterra can reach that destination, it will be a much larger and much more valuable enterprise than it is today. Multiples larger and multiple times more valuable. That's just the bottom line. And now I want to track the progress of the business. How well is Proterra progressing towards this destination of being one of the leading players in this industry? Is the business executing on its business plan effectively? And well, from what we can reasonably see in the public eye, they are. We will know more when they report earnings very soon and report earnings in the future, because they haven't done yet. Obviously, this is a new public company. And although there have been some reports that suggest work still needs to be done on some of the manufacturing elements, I will leave a link to those in the description below. But as far as demand goes, they're going strong. There's still 700 million of order backlog that is still being pushed out, and we're seeing various new contracts being signed with Proterra, such as the deal with Maryland State, which is the nation's largest EV bus contract that's ever been signed. They also signed a fairly large contract with Washington State as well, which is another fairly large contract that's signed for electric bus manufacturing. And additionally to this, there are other deals that have been signed for the transit business. And when we think back and look at the preferred destination of this business, or suggested destination that I've just run through, this is the way that it needs to get there, by doing deals with state organizations. That's going to build out the transit business, which is the part of the business plan that's coming in the next 2 to 3 years. And then we need to also see more commercial vehicle deals being signed, just like the one here with Lightning E-Motors. They're going to be powering their electric vans, and like this one also with Volta Zero, a new electric CV manufacturer. They're going to be supplying electric batteries to power these commercial transit vehicles. And we also saw bigger deals with the likes of Daimler and partnerships with the likes of Daimler that probably should start to take effect in the business plan at around the 2022 or 2023 stage. And like I say, we'll know more in the earnings and results release. But apart from a couple bearish reports that have been written and a Seeking Alpha article that people thought may have put down the stock, but in all honesty, it was more positive than it was negative. You know, the picture overall for Proterra at the moment, I would say, looks very positive. Doesn't look like it should be a company dropping 32% in 1 week. And so now the last thing I want to do is just revisit the valuations and the assumptions, estimates that I made, all of that analysis, that scenario analysis that we did, and just double check our estimates and see, is Proterra a good buy right now? And so here we are in our scenario analysis for Proterra. As you can see, we have 4 quartiles here of performance. The top quartile is what Proterra's management team and the people involved in the deal said they think they will be able to do over the next 5 years. They want to reach $2.5 billion in revenue by 2025, which, based off the destination analysis we've just done, I think they can get to. But some people thought this may have been too bullish, which is why we done some upper middle quartiles, a lower middle quartile, and a bottom quartile. And now, with the share price down at $11 per share, or $11.50 per share today, even the bottom quartile is showing as undervalued, 14% undervalued. And this really did have some underperformance on it, only got a 37% compound annual growth rate, only getting them to around $1 billion or just shy of $1 billion of revenue in 2025. And we know they have that $700 million of backlog, which really should take them to $1 billion in revenue by 2023 if we're being realistic. But anyway, this is the bearish example. TV multiples or market multiples were used using different companies in the EV space, what they were selling at on an EV to sales basis, and then the EV to EBITDA or earnings multiple. Really, we were just thinking about the growth of the business. But as you can see, every single quartile analysis points to the company being undervalued at the moment. Some very much undervalued. And look, regardless of what's going on, and I'm not saying this top valuation quartile or what the management said they will be able to do is correct, but if we just analyze that for a second, this 5-year performance that they've set out for themselves to do, this is what they think they will definitely be able to do over the next 5 years. And we've gone for some fairly conservative, I would say, multiples of what they could be selling for in 2025 if they do this, 25 times earnings, something that really you wouldn't see if a company's growing at around 77%. But hey ho, we've gone with that. That's showing the stock as having 142% upside, right? With a fair value of around $27 per share. Now, do I really think that a company that's probably got 200 to 250 million in revenues at the moment is worth 6 billion? I don't know, but this is what they've said they will be able to do. So maybe we need to take that with a pinch of salt, but really it just demonstrates how low the valuation has got for this company. It's now got an enterprise value of 1.9 billion, which in my mind looks quite cheap for a company that's playing in this space, which we know is going to be a high growth space. We're seeing that evidenced in the contracts that are being signed and with the deals that are being put together. It's also evidenced in the backlog that this company has, that 700 million of backlog. And even on the bearish scenarios, it's starting to look good. It's starting to look like this company does have a margin of safety unless there's something fundamentally wrong with the business that we're missing here. And so that's my update for Proterra at the moment, guys. I have, for disclosure, been buying more of Proterra when the drop happened. I bought more at $14 per share. I bought more at $13 per share. I may buy a little bit more today as it's down at $11 per share because I don't have a huge position in the company, but it's a fairly big position for such a small business. With some uncertainty, I will say that. And you can get access to our quartile analysis on this, and I've also got one on SoFi as well. If you head over to the Patreon, you'll see this and loads of other valuations and analysis that I've done on the Patreon as well. So if you're interested in supporting the channel, go over and check those out. And so apart from that, if you could just leave a comment down below, let me know what you think of Proterra and the recent drop. Do you know anything about the recent sell-off that I haven't covered in this video? If so, let me know in the comments below. And then leave a like if you enjoyed the video. That really helps push the video out to more people. Subscribe to the channel if you haven't already. I will see you all in the next one. Good luck with all of your investments.